Veteran investor Mark Mobius is concerned about the consumption slowdown in India. But speaking to Bloomberg's Rishad Salamat, he advises investors to buy consumer-oriented stocks when they're down.
It does have a great future, and things have changed a great deal under Modi. There's no question about it. You can see the RBI is beginning to react. They've lowered interest rates. The now forecast for GDP growth is about 6%, but Modi wants 8%. So there's no question in my mind that the RBI is going to be under tremendous pressure to keep on lowering interest rates. They're also loosening the rules for the non-bank financial institutions to help small businesses, which is another big point that is very important. The big worry, of course, is the motor industry. You know, the automobile industry employs 35 million people, and this could be a real problem with the economy, which is why more credit in the system is going to be needed to get up to that 8% growth.
Absolutely, Mark, and we've seen car sales actually fall through the floor in India. That's one thing which is also perhaps demonstrable by what else is going on with the consumer. We've had the CEO, or the managing director at Hindustan Unilever, say that the consumer is no longer a sure bet in India as well, and that's surprising for a country which is so dominated by a domestically focused economy.
No question about it. They've got to do something with the consumer, and that means putting more money in the hands of the consumer. You must remember that India's consumer credit is still at the early stages. There's tremendous room for more and more credit given to the low-income people, middle and low-income people. So there's going to be a lot of need for reform in that area. So I believe that given the fact that Modi is so intent on getting that 8% growth, I think there's going to be a pressure to lower rates, which, by the way, India is among the highest in the emerging markets world. So there's lots of room for lower rates.
Mark, you know, just mentioned the consumer. There's a lot of fear surrounding what the consumer does. Is this dovetail into be greedy when others are fearful and be fearful when others are greedy? And what does that mean for your strategy at the moment? What are you buying there? What are you selling there?
That's the reason why we're looking very closely at the consumer area, because it is down, it is depressed. So companies that are making consumer goods, including automobiles, we're looking at the automobile sector as well as others, we figure, well, you know, that's where the place to be, and avoid those areas that are not going to be exposed to the consumer. Because really the growth is going to be on the consumer side, not on the industrial side necessarily. Although there are some companies that will do very well because of infrastructure spending, then we look at those. So it's really pick and choose which areas look like they're going to be recovering. And of course, we like to go to places that are depressed, companies that are not doing very well in the market, but still are paying dividends. Again, I emphasize the need for cash flow and dividends.